Hi everyone, welcome back to my YouTube video. In my last Instagram reel, I had talked about 4 different stocks in 4 different companies, where currently the stock prices were down due to the increase in the raw material costs, which has affected their margin. But I believe that this downfall is only temporary and the stock prices will recover. Although I am not SEBI registered, so please take my views with a pinch of salt and do your own research before you put your hard earned money into these companies. Well, the first company that I have noticed is Prakash Pipes. It is a company with a market capitalization of 600 crores with a quarterly cash flow of about 37 crores. That means with an annual cash flow of 150 crores, you are getting it at a very good price of 4 times cash flow. Now, I know you might be wondering it is a commodity business. However, it has a strong moat in 2 states, which is UP and Punjab. Secondly, the stock is at a PE of 11, which is the lowest ever in the last 5 year average PE of the stock. Also, the company is totally debt free, the balance sheet is debt free, it has reduced debt in the last 5 years, which shows that the management is actively focusing on increasing shareholder value. The company has shown a profit CAGR of 27% in the past 5 years. So it is very difficult for me to know or to be able to explain why the company is at a PE ratio of 11. Also, when I called some of the dealers of the companies in Punjab, which is my home state, I came to know that they are extremely happy with the way company treats the dealers and the vendors. In fact, that is also visible in their working capital cycle, where it has gone from 25 days to 19 days, which shows that vendors and dealers are paying Prakash Pipes 6 days before than they used to in the previous preceding years. When you look at their competitors, it is a highly competitive commoditized business. But you look at companies like Astral and Supreme Industries, they operate all over India in such large scale that it allows for Prakash Pipes to be able to thrive and exist in their own small niche ecosystem. Also, if you look at the clientele of Prakash Pipes and the way they are expanding, you come to know that their clientele is so strong that it gives me further belief into the company. In their last quarter, they had been reporting less PAT than they used to, which is primarily as discussed due to the increase in the cost of raw material. Hence, I believe it is a one-time thing. And a cherry on top is that the promoter has increased his stake from 44.27% to 44.41%, which basically means an increase in the ownership by 0.15%, which basically amounts to rupees 1 crores of buying that the promoter has done in the company. The second company we have is Kalyan Jewelers Limited, which is a hot stock nowadays, especially after gold prices have gone up. Now, last year, let us say if I wanted to buy 1 kilogram of gold, I would have bought it at, let's say, 60,000 rupees. And today the same gold is available at 1.2 lakh per gram, which means I will not buy 1 kilogram of gold, I might buy 700-800 grams of gold. So even though the absolute revenues of all the jewelry companies has gone up due to the increase in the price of gold, the volumes that they used to sell has not gone up, which makes me think that those volumes have to pick up again and the volumes will someday go back to all-time highs. Also, Kalyan has shown exceptional capital allocation and exceptional capital efficiency, where the company has shown that they want to reduce debt. Recently, they had a property stuck with the bank, and they want to get that property off the bank's books so that they could sell it off and reduce further debt. They have a debt of 5,000 crores, which they expect to bring down to zero over the next decade. Also, the stock has taken a beating due to 2 reasons. Number one is due to people having a feeling that the stock is priced to perfection, and second of all, the promoter had a tainted image in the last 2 quarters due to allegations of related party transactions in the company. However, I like to believe that we should look at it from a different lens. Let me share the way I am thinking with you. First of all, the company has reported its highest ever PAT and highest ever cash flow in the last 2 quarters in fact. So I think to myself, does the stock which used to once trade at 800 rupees deserve to be at 500? Second of all, the volumes are yet to pick up. Thirdly, the company is expanding 60 more stores in the next year, They already have a strong foothold in South India and they are trying to expand in North, which has worked out pretty well in the last 3 to 4 years. Which makes me believe that the company is on the right track to grow, and it has also shown growth of about 38% CAGR in profit over the last 5 years. They have also had a dividend payout of 18%, and they have also redeployed 60% of whatever profit that enters their books into further capex, which means the company is trying its best to grow, and the management has also guided for a 20% plus growth. Also, Titan, which is an amalgamation of so many different businesses, is trading at a P ratio of 86. So why does Kalyan trading at a P ratio of 52? What justifies that? Although there is no justification for this, but it makes me answer one question that sticks in my head. Should the stock go back to its all-time high? The question is not when. The question is, will it go back to its all-time highs? In the end, I also would like to point out two facts. Number one, the promoter in the last 2 years has increased his stake from 60.5 to 62.7%, which is a massive 2% increase in the ownership of the stock by the promoters. 2% of a 50,000 crore company is 1,000 crores of buying that they have done in the value of their stock. Secondly, it is also a favorite of Motilal Oswal Mid Cap Fund, which has consistently increased its stake from 4.29% last year to 9.1%. So they own almost 10% of the company, a stake worth 5,000 crores by India's best performing mid-cap fund over the last 5 years. This makes me believe that this temporary increase in raw material, which for Kalyan is gold prices and for Prakash pipes is PVC rates, this is temporary. It will recover. All the players are facing this problem. And when the whole industry is down, the industries don't disappear, companies disappear. But if the company that you invest in has good balance sheet, good promoter, the promoter has shown his interest in the strength of his company by buying more stock, it makes me believe that these things are temporary. They will revert back to its mean. Stock market is a mean reversion mechanism, and these prices will recover. Thank you so much for listening. Let me know if I'm wrong about my thesis on any of these stocks. Let me know your point of view, and I would love to talk with you or debate with you in the comment section. Thank you so much. Jai Hind.